Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where we recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano. It is the 24th of July, 2023. Alright everyone, let's get into it. So you already know what day it is. It is the day after the ETH ETFs went live, and what a showing. It was a very, very strong launch with, I think, expectations exceeded across the board. Mine were about par. I think I originally said that if we were at essentially 30% of BTC's volumes and inflows from its kind of first day, then, or I guess like net flows from its first day, then essentially we are at market cap parity, which is to be expected here. So that's pretty much what happened there. Now, I'm going to go through a bunch of different things with regards to the ETH ETFs in a sec, but I do want to mention one thing is that I want to caveat all of this by saying something that I've said lots of times in the past is essentially that this is like one day of ETF activity, guys, and this is the launch day. The ETFs are special because they're a passive flow vehicle, as I've said so many times before. I mean, I've said this to death, but I do want to remind you guys, they are a passive flow vehicle. The flows come in over time. It is months, years, decades. That's what these kind of ETFs are for, that long-term time horizon, which obviously doesn't match very well with the schizophrenic crypto Twitter investors who basically look at the hourly chart and say, oh, ETH's not moving up based on the ETF going live. That's bearish. Like, that's just so stupid. It's so dumb. But yeah, just want to caveat all that by saying that this is just the first day. This is the launch day. We're going to see how things shake out over the next few days. But on that note, the first day was incredibly bullish. We had a positive net inflow of 106.6 million. Now, of course, you can check out this website that I talked about on the other day's episode, on Monday's episode, farside.co.uk. They track all of this stuff here, and they're basically tracking the flows to each of the ETH ETFs, and then showing the total net flows at the end of the day. So you can see here that the two biggest winners from today for the ETH ETFs was BlackRock, of course, like that's pretty obvious, and Bitwise, actually. So BlackRock brought in $266.5 million of fresh inflows, Bitwise $204 million, Fidelity coming in at third place with $71.3 million, and the rest, 21 shares, VanEck, Invesco, Franklin, had around, I guess, like 7 to 13 million inflows. And then, of course, there was a huge outflow from Grayscale's ETH product, which is to be expected, of almost $500 million. But you add all that up, and the net comes to 106.6 million on the positive side here. Now, I think the big open question, as per usual, is going to be what the rest of the ETH flows looks like, because as I said plenty of times on the refill before, like, yes, ETH had almost $500 million of outflows, but then a lot of that probably went into BlackRock, Fidelity, and Bitwise's ETFs, right? A lot of that went into these other ETFs. Not so much went into the mini trust that Grayscale has right now, but I think that's because they did the auto conversion already of that 10% ETH into the mini trust. So there was already $1 billion of flows basically going from ETH to the mini trust here, but that's not counted, as it shouldn't be, because of the fact that it was done essentially like an automated fashion. It wasn't done through the traditional means of what you see here. But yeah, that's what the table looks like today. Now, of course, we have another 3 days worth of trading data coming for this week, but again, it's going to be looking at the next few weeks, next few months into the year's territory to see what this all looks like. And the Grayscale ETH outflows are going to be over relatively quickly. They're not going to last very long. That is really just like a rip the band-aid off thing, and after that we're going to get some, I guess, like a nicer picture of what those flows will look like, similar to what BTC has had. And Farside actually tracks BTC's ETFs, you can see here on the same page, and the flows has generally been quite positive. And what was interesting though today is that it was a negative flow day overall for the BTC ETF, or at negative 78 million. And that's because I believe there was a bunch of people rotating out of BTC into ETH, or at least a portion of their BTC ETFs into ETH. It was especially apparent with Bitwise, where you can see here that Bitwise had a net outflow day for their BTC ETF. If I go to the thing here of $70 million, and into their ETH ETF, they had $204 million go in. So essentially, what happens here is basically that people would have sold off some portion of their BTC ETF and gone into the Bitwise BTC ETF, I should say, sorry, and gone into the ETH ETF there, which is pretty natural. I think if you're going to do a market cap weighted thing, 70-30, 70% BTC, 30% ETH, I think a lot of people have been doing that there. But yeah, overall, an extremely positive day for flows. Now, of course, Eric Balchunas has been keeping us apprised all day, or all yesterday, I should say, on everything happening with the ETH ETF. So he said here that he was curious how the ETH ETFs would rank in day one volume. Now, this is volume, which is different to flows. This is trading volume versus all 600 or so new launches. So this is all new ETF launches in the past 12 months, but excluding the BTC ETFs. So BlackRock's ETH would be number one by a lot. Fidelity's product would be number two. And then the a few others here would be in the top 5, top 10, top 15. So he says here, and CETH, which was the lowest among the group, would still rank in the top 10% versus a normal new launch. Just another way to illustrate how unusual all of this is. And I also saw Eric put a tweet out saying that the ETH ETF volume was basically top 1% of all ETFs. So crypto is making a big splash here, guys. Like, I think that there's been some, I guess, comments, not so much from Eric and James, the two main Bloomberg guys. They've been quite bullish on crypto overall. Yes, they had their, I guess, like faltering and perceived bearishness with regards to the ETH ETF leading up to the approvals there, but generally they've been pretty pro crypto. Then you look at some other, I guess, TradFi analysts out there, and they've been very negative on these ETFs. They're saying, oh, it's just degen retail money. It's not real flows. It doesn't really matter. Like, it's going to slow down, and eventually it's just going to be a nothing burger. But that hasn't been true at all. The BTC ETFs are as strong as ever, still the strongest ETF launch of all time. ETH is coming in at pretty much the second strongest ETF launch of all time, and we're going to see those flows continue over the next, coming weeks and coming months and coming years, and it's only going to get stronger over time. And yes, other assets will probably get ETFs in the future. Not sure when that will be, but I think that's good for crypto overall. Like, having an ETF doesn't guarantee that you're going to get flows either, guys. Like, it wasn't a guarantee for BTC, it wasn't a guarantee for ETH. It's not going to be a guarantee for any other asset. The assets have their own demand side, and the assets have their own stories to sell on to clients. Whether the clients buy into that story or not is up to them. So there's no guarantee that, oh, okay, you have an ETF, that means that all this money is suddenly going to hit you. Because as Eric said here, most ETFs do not have anywhere near the launches that the ETH and BTC ETFs have had. Most of them pretty much don't trade very much at all. I think, like, I saw a tweet from someone, I can't remember who it was, saying that most ETFs trade under $1 million a day, which is basically nothing, right? There are complete random meme coins that live or die based on like the weekly time frame that trade more than that, essentially on chain, not even on centralized exchanges, just on chain here. So hey, this is a really big showing here for ETH overall. Now, I did want to shout out just one of the ETFs in particular, and that's Bitwise's ETF. Now, I'm not buying any of the ETH ETFs myself, at least not yet, but if I was, I would be going with Bitwise. Now, I haven't been paid by Bitwise to say this. I don't have any kind of professional relationship with the Bitwise guys. I have talked to them in DMs before. Actually, they invited me to ring the bell at the New York Stock Exchange for the launching, or to be part of the ringing the bell for the launch of the ETH ETFs, but unfortunately, I live in Melbourne, which is the other side of the world, to New York, so I couldn't make it in time. But these guys are just chads. They really, really understand crypto on a deep level. They understand how to bridge the gap between crypto and the traditional finance world. And not only that, they also understand what it means to be part of the Ethereum ecosystem. And what do I mean by that? Well, basically, they are donating 10% of their profits to Ethereum open source developers. Now, this includes two firms right now, or two, I guess, like guilds, you could call them right now, the Protocol Guild, and one that's doing research on, I believe it was, I can't remember exactly what it was. I think, oh, here we go. The recipient org, PBS Foundation. That's right. It was around PBS, Proposed Builder Separation. So those two orgs are getting 10% of profits from the Bitwise ETH ETFs donated to them. Bitwise's fee is also quite low at 0.2%. I believe that it is the lowest fee besides the mini trust. Second lowest, but it's on par with some of the others here. But it's still very, very low. And given that they're going to be donating 10% of their profits to Ethereum open source developers, like, I can't think of a better ETF to buy than the Bitwise one if you are a hardcore Ethereum person or a hardcore ETH maxi, because they are not only supporting Ethereum, but they're also very competitive on fees. They understand the ecosystem very well, and they had a really strong showing already with their first day inflows of their ETF, which means I think other people are seeing this as well here. And also, on top of this, they have integrations with crypto native applications like ENS. So you can see here they announced the Bitwise Ethereum ETF became the first US ETF to publish its Ethereum addresses and set ENS subnames for each address. So you can actually see those subnames here tied to each of the addresses, which is just another step further that Bitwise has taken that the other issuers have not taken. Now, of course, most, if not all, of the other issuers are not crypto native. I think the only other one that's crypto native or could be considered crypto native on the larger side is Grayscale. I think 21 shares as well is crypto native, but Bitwise has just gone above and beyond here. So as I said, I'm not being paid for this. I'm not professionally related to any of the Bitwise guys, but they have just proven time and time again that they are in it for the long haul. They understand Ethereum values. They understand what it means to be involved within the Ethereum ecosystem. So I wanted to give them a big shout out there, because we need to be encouraging more of this. We need to be encouraging not only more of these organizations kicking back some of their profits to Ethereum development, such as the Protocol Guild and other organizations out there, but also using products like ENS in a unique and interesting way, which is exactly what they're doing here. So I really do hope that Bitwise continues their strength going forward. I really do hope that they're the number 2 ETF. I know they're probably not going to be number 1 because BlackRock is just so big, but being number 2 behind BlackRock is still phenomenal, right? Like, still very, very good. So I'm hoping that they continue this momentum as time goes on here. There's no obviously guarantee of this, but we'll see how it goes. I think they've just done a masterclass in being able to be involved with the Ethereum community, and also being involved on the TradFi side of things, and really deeply understanding the Ethereum value proposition, and on selling that onto people that may know absolutely nothing about Ethereum, right? And trying to relate to those kinds of people there. So yeah, that was pretty much like most of the ETF coverage that I wanted to kind of talk about, I think, today. As I said, I'm going to keep monitoring this as time goes on over the next few weeks. We're going to see how things play out there. I think maybe the last thing I want to say is regards to market impact. Now, of course, for those of you who've been paying attention all day, the ETH price is basically flat on the day. Now, I want to give a bit of history here. So when the BTC ETFs launched on January 10th, BTC dumped 10% on that day, I believe, and at 15% within in those 2 days, and then kept going down. And it was a month until the BTC price was back at the price it was when the BTC ETFs went live. Now, I strongly believe this was due to the fact that it was a sell the news event, at least temporarily, and it also, there was a massive amount of grayscale outflows, I think 50% outflows there, because the discount wasn't as, I guess, like small as it is for the ETH discounts here, and it wasn't priced in because it was the first time it was happening there. No one knew that the outflows from the grayscale ETFs were going, the grayscale GBTC product was going to be that substantial there. So it was different. But now the market knows. The market knows, or can predict, or at least can expect that, oh, all right, let's say the maximum amount of outflows from ETH will be 50% because that's what it was for GBTC. We'll price that in. The market also had 2 months between the approval of the 19B4s and the starting of trading for the ETH ETFs, which it didn't have for BTC. And in those 2 months, the ETH price went from 3K to 4K to 2.8K to 3.5K, basically the midpoint of that range. So essentially, the market has already priced this in, or at least has attempted to price it in. It could still go down over the next few days, who knows, right? For whatever reason. And this is all obviously speculating on rather short-term price action here, but I don't think it says anything. I don't think there's any signal to be had here that, oh, okay, well, look, the ETH ETF flows are positive on the day. Why did price not move? It's relevant, I think. I don't think it matters at all. But on top of that as well, a lot of the buying and selling gets done OTC too. Now, OTC does hit the market, right? It does eventually have market impacts here. But let's just say that you're an OTC firm and you have billions of dollars of ETH to sell, right? You're just sitting on billions of dollars of ETH. That's part of your inventory, and you want to sell that. Well, if you sell that OTC, that has no market impact because you're literally just changing hands from one ETH holder to the next without going through the public market, and that inventory was already available to them, which essentially means that their OTC broker didn't have to go out to the public market and buy more ETH to satisfy that buy order. They already had it for them. So it'd be like me basically saying, well, I have held this 10 ETH for like a year, and I bought it a year ago on the open market and I'm holding it. Now I have a friend that comes to me and says, hey man, I want to buy that 10 ETH off you. I'll buy it off you for this much. I'm like, okay, here you go, man. Like that obviously wouldn't happen. It'd be the other way around. I'd be buying ETH off someone else. But essentially you can see how that won't have an impact on the market because it's a completely off market order. The only market impact that it has is when I bought it from the public market, and when that person, if they want to, sells that ETH into the public market instead of OTC again. Now, of course, the reason why the OTC markets have an impact on the upside as well is the fact that the inventory is not unlimited. If this person or this firm has $1 billion of ETH to sell and that gets depleted, well, they have to go source another $1 billion of ETH if they want to fill the same order again, or they have to go source more ETH to fill the orders. And that's where the price is, that's where it's reflected in the market price here. And that's essentially what happens with these ETFs. They're big orders. They're probably mostly done OTC, and that's not really visible to us on Definitely not on chain. It's not visible to us generally anyway, but there is a market impact over time because of the fact that there are more buyers than sellers, right? The law of markets, essentially, there's more demand than supply available for people. So that has a market impact. Even if it is just OTC firms trading, they still have to go to the public market to replenish their inventory. They can obviously go to other OTC brokers and buy off them. But the thing is that then those OTC brokers have to go to the public market. So eventually, the only way to acquire ETH is from the public market, which does push the price up, of course, because there's less and less ETH on the public markets to buy, and all these people are scrambling to get ETH. So essentially, the ETH price floats up over time. This price is set at the margin. This is basically Markets 101 here, guys. It's not very complicated, but I did want to put that out there because I've seen comments. Like, I saw comments within a couple of hours of the ETFs going live being like, why is the ETH price doing nothing? It's like, guys, what are you talking about? We've known that the ETH ETFs were going live for 2 months now. And we had lots of volatility in those 2 months, as I just described. That was the activity. That was the pricing in of the ETH ETFs going live, at least over the short term. Over the medium long term, you're going to see a very different picture. As I've said before, I have a strong belief that Q3 and Q4 of this year is going to be really good for ETH. But that's the medium term. Long term, like years into the future, I still strongly believe that ETH is going to be one of the best risk reward kind of investments you can make for at least the next 10 years. Like, I really, really believe that. And I mean, I have like most of my net worth in ETH, excluding my I guess like my house. So most of my net worth in ETH, and I put my money where my mouth is for sure. But yeah, I think people need to repair their dopamine receptors, because I think they've fried them with short-term price action, and just focus on the longer term. As I said the other day, if you're a long-term investor, you should not be looking at the day-to-day or week-to-week or even maybe month-to-month price of ETH. You should look maybe every 3 months. Like, be like, okay, well, I bought ETH at this price. I'm going to look at it in 3 months' time. Look at it in 3 months' time. Oh, look, it's above my buy price. Cool. You know, you don't have to pay very close attention. Most of the time, nothing happens. Like, you can go on the chart and see that. Like, day to day is a random walk. Most days, the market is going sideways. Nothing is really happening. It's really just a small percentage of days where the market is extremely volatile, where it's basically moving up or down. And yes, there's trending periods for any type of trend, like a bear trend, a bull trend, or a crab trend. But day to day, you're not really going to see that, right? So yeah, anyway, enough on the ETF stuff for today. Actually, one last thing on the ETF stuff, which was related to a POAP that's now available. So this POAP was put out here or shared on Twitter here by Superfizz. You can go mint this for yourself. This is just celebrating the launch of the ETH ETFs in the US. And the $3 donation for minting the POAP goes to the Austus relay, which is one of the MEV boost relays that is non-censoring. So really great to see them getting some support there. But yeah, you can go check this out and mint the POAP for yourself. I'll link it in the YouTube description below for you to do so. All right, so just a couple more things to get through for today. Obviously, there wasn't many big announcements from projects today, given that they knew they'd be overshadowed by the ETH ETF kind of fanfare. But there was a big announcement out of Erigon. So Erigon 3, the first all-in-one EVM node on the efficient software frontier, is now live. This is a big release from Erigon here. So if you are running Erigon today, then you probably know that this is coming for quite a while now. I think I've basically covered this on the Refuel a bunch of times before, but essentially what they were trying to do with Erigon 3 was improve everything, like not just on the archive node side, but and basically make a better full node generally, and basically make a better and more efficient node overall for Ethereum here. So you can see here that they're claiming that Erigon 3 is the best full archive node, full node, and proved node in the world. Erigon 3 has a data structure that allows for ultra-fast RPC calls, so it's probably even better for services like Infura and Alchemy to run Erigon versus something else if these claims are true. Erigon 3 is designed to reach and exceed 1 gigagas per second in block production, which is huge, because this can also be translated and used at L2, not just L1 here. And there are a bunch of other features that you can read about. I mean, I'm not going to read the whole tweet. It's a giant tweet here. But congrats and kudos to Erigon for getting version 3 of their client out. As I said, you can run this for yourself today. There is a link to download it all in the tweet, which I'll link in the YouTube description below. But yeah, big news out of Erigon. And for those of you who don't know, it's actually both an execution layer client and a consensus layer client as well. So essentially, you can just, from my understanding here, just run Erigon 3 and you can have a full Ethereum node. You don't have to run something else, which is pretty cool actually. And considering Erigon is still a minority client, this might be something that you guys would be interested in running. Obviously, it is not, it is still in beta. It is very early. It just got released, so you may not want to run it for, you know, in production for your validators, but you can run it in production from just like a full node or an archive node that your validators aren't connected to. So you can go check this out. I'll link it in the YouTube description below for you to do so. All right, moving on. Tim Robinson has posted a blog post today titled, "What is Ethereum?" Now, this is basically his, I guess, contribution on the day of the ETH ETFs going live, because of the fact that now that we have a new investor base to pull from with the ETFs, we need to be educating them on what Ethereum is. We need to be doing it in their language. We can't be using the language that, I guess, gets used on the Refuel and gets used in the Discord channel. We definitely need to have a more mainstream appeal and definitely need to have a more, I guess, like normie-friendly pitch for Ethereum. Now, of course, all of the ETF issuers themselves are going to be pitching this in their own way to their own clients, but I think having something coming from a crypto native is especially important, because there's going to be a lot of people that come into crypto that would definitely want to know what Ethereum is, what's the value prop, why they should buy ETH, etc., etc. And this is definitely a really great blog post to send them, which I'll link in the YouTube description below, for you to get them up to speed on what Ethereum is these days. Because as I've said plenty of times in the past, Ethereum is a lot of things, guys, and it has evolved over time for what it is. You know, the main narrative of Ethereum used to be that it was a global computer. Like, that was the thing that everyone was shilling Ethereum as, and that changed over time. It's no longer a global computer. But I think the one narrative or the one thing that Ethereum basically is, above all else, is a global settlement layer. That, for me, is like the value prop of Ethereum. It's a global settlement layer for all types of value. Like, that is as high level as I can give it. But saying that to the everyday person means absolutely nothing. They have no idea what that means. So you have to basically break that down into different parts. You have to use analogies. You have to basically say, well, okay, the world's financial system today, you know how you have to wait like 3 days for a wire transfer at best? Well, that's because of settlement times. That's because it takes forever for things to settle between different parties. Now, you can use those analogies because that's relatable for people. They have bank accounts. They've probably done a wire transfer before. And then you can say to them, well, with Ethereum, settlement is near instant. It's not technically instant. It is 12 seconds for slots to settle, basically for slots to be proposed here. But then it's even longer, I guess, for finality, for 13 minutes. But that's still substantially faster than anything you'll get out of TradFi, right? Like, for ultimate settlement here. But explaining all that, yeah, as I said, like, can be quite daunting and confusing, can be something that leads you in a bunch of different directions. So you need something concise to send to people, which is exactly what Tim has written here. So enough of me rambling about this. You can go check this out for yourself. I'll link it in the YouTube description below for you to do so there. All right, last up here, just wanted to shout out Base for essentially doing what I wanted them to do. Like, I remember, I think I talked about this at least 6 months ago, probably even longer than that, where I said that Base has a unique opportunity to grow USDC adoption on the network and become the de facto payments layer for USDC. Obviously, Tether is very popular on places like Tron. I think it's as equally popular on Ethereum, but like Tron is used for small payments. Now, USDT is not and USDC is trying to compete with USDT. So essentially, what happens is that obviously Base or Coinbase isn't going to be promoting their direct competitor, because Coinbase, I believe, has a 25% ownership share in Circle, which are the issuers of USDC. So they're not going to promote their competitor Tether. So they have a unique opportunity here where they basically have their layer 2, which they can offer free transactions for USDC transfers on, and they have their vested interest in USDC, and they're going to keep pushing it. And they have been. Like, since the start of the year, they've been pushing this in a really big way. As you can see here, that weekly USDC transfers on Base have grown to $20 billion. So that's $20 billion per week. And at the start of the year, this was basically very, like, way less than that. I think, like, I'm just eyeing the chart here. It was maybe like $1 billion or a couple billion. So this is a 10 times increase growth here over the last 6 months, and they're just getting started, really, guys. Like, Base has really just picked up steam over the last maybe 3-4 months since Blobs went live. And then Brian Armstrong quote tweeted this and said, "The building blocks for crypto payments are finally here." Right? Like, Base is 1 second, 1 cent global transactions. USDC is a trusted stablecoin. It's very liquid. It's very, as Brian says, it's trustworthy because it's backed by some of the biggest companies in crypto companies in the US. We have smart wallets now, which means simplified onboarding, no more 12 or 24 word seed phrases to remember, and tap to pay with NFC payments. So you can basically install Coinbase Wallet today anywhere in the world and get started using USDC on there for very cheap and also with very fast transactions. So I am so glad to see that they're really pushing hard. They being Coinbase is really pushing hard on USDC adoption on Base, because as I said before, I don't like that Tether is so big compared to USDC. I would like that market share to close there, because I don't like having a de facto, I wouldn't call Tether a monopoly, but like I would like there to be at least two players with relatively equal market share. It's still a long way to go for USDC. They did have that setback with that DPEG event that happened. Was that last year or the year before? Man, it feels like forever ago. But they did have that setback with that DPEG. But USDC market cap is now 34 billion. USDT is 114 billion. So there is quite a gap still there. And I'm actually curious to see if the USDC market cap was bigger in the past, because I think it peaked at like 55 billion and then fell off a cliff due to the DPEG, right? And I think it bottomed at around 24 billion and it's up to 34 billion now. So it is still growing, guys. Like, and this is over the last 6 or 7 months. So I think that as long as that growth continues, it's a real positive there. And I don't want there just to be centralized stablecoins like USDT and USDC. I want there to be more attempts at decentralized stablecoins. I know that GHO from the Aava ecosystem has been growing quite nicely recently, and there are a few others out there being worked on. But at the end of the day, the centralized stablecoins are just much easier to scale because of the fact that you can just put US dollars in a bank account, hold it there, issue the IOU token, the Tether or USDC here, and away you go. Whereas with a truly decentralized stablecoin, what you need to do is set up this whole system. It has to be all on-chain, smart contracts. You have to make sure that you've got good mechanisms in place to keep things stable, because you're essentially using a collateral-based mechanism to do this. And if you're not using a collateral-based mechanism, you're using some other mechanism that is probably untested, or that looks like a Ponzi, or that literally is a Ponzi, like what Terra did with Luna and UST. So there is a lot of different things at play here. So I'm just glad that we at least have the strong centralized stablecoins in Tether, in USDC, that people can still use, because as I've said in the past, not everything has to be decentralized, guys. Like there is, not every app has to be decentralized. I strongly believe, obviously, that Ethereum and its layer 2s should be decentralized and should be censorship resistant as a consequence of that. But the apps themselves, they're going to be centralized, decentralized, semi-centralized, right? There's going to be different parts to all of this, and that's totally fine. But I do want to see the decentralized stablecoins obviously continue to grow and continue to compete here, because DAI is still the biggest, but its growth has been relatively stagnant. I know there are a lot of different kind of things in the works for Maker generally, but they're kind of pivoted into being not just a stablecoin over the last couple of years, but more than that, right? With their reward asset stuff that they're doing, their treasury stuff that they're doing. So there is a little bit of expanded focus, you could call it, right? But anyway, enough about stablecoins there. You guys know my view on stablecoins. I'm super bullish on them. They are the #1 killer app that we have in crypto right now. It's just great to see that USDC is continuing its growth on Base here. But I think on that note, that's going to be it for today. So thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all on Friday. Thanks everyone.